Well, welcome. I'm Steve Patterson. This is my live webinar presentation. Let me get the disclaimer out of the way here so none of you guys sue me. Yada, yada, yada. Cam is fine. Everything's good. Remember, you must be aware of the risks, etc., etc. 27 years of experience, currently an FX retail trader, red managed accounts, private coaching available upon request. All my contact information is here. All right, so let's get right down to business. Let's talk about trading. How's everyone doing today, by the way? Everyone doing well? Good. Okay, cool. As you'll notice, my charts are colored. One of them is like a salmon-y color, and the other one is like a green color. So basically, I have a couple of things that I do. I have more of a swing trading type of approach, and I also have a day trading approach. So depending on what I am looking at, I would change the color of my chart. Okay. The swing trading ones, which trade basically off 1 hour charts, they stay the same pretty much for the whole week. And so these charts right here that you're seeing 1 hour charts, they never change. So I've been looking for longs on the Swiss franc all day, all week long, and of course I have different ways of getting into the trade. But if any of my students are here, they can confirm that this chart has basically been looking for longs, and there were a couple of good trades on the Swiss franc into some liquidity runs. There was a nice trade up here where we had a bunch of liquidity building up here, and there was a trade down here that got 73 pips or 74 pips into this liquidity area here. The market hung around here, and another area of liquidity was building up around this area, and there was another trade that happened late last night that you could have also grabbed another liquidity run for about 46 pips here. So on the Swiss franc alone, just looking at some longer term swing trades, there was about 100 pips to be grabbed this week so far. We're not done the week yet. Now, my personal style is if my chart is green, I don't short. Okay, I don't take shorts. So in this particular case, I would have only been looking for longs on any trades on this Swiss franc area. Looking at the Japanese yen, my chart was salmon. Okay. And by the way, guys, I apologize. I have one of these little space heaters. The condo I live in has like 20-foot ceilings, and it doesn't, even though I have the heat on, it goes all to the roof. So if you hear this big noisy thing in the background, it's just my space heater. I'm just a skinny guy. I get too cold. In any event. What M mean in front of the symbol on the chart? What M means in front of symbols on charts? I don't know what you're talking about, Jay, but in any event. So we're looking at shorts here. Oh, I don't know. I think this is I don't know exactly what that is. Just so you guys know, I don't trade actual future. I don't actually trade the Forex market. Okay, I actually trade the currencies. or the what do you call it, the futures market. Okay, I have a real problem with some forex brokers. I've only found one legitimate forex broker out there, and I find that stops get run too easily, and so I use MT4. But to be honest with you, I trade the currency markets. The what do you call it? The futures markets more than I do. What do you call it? Yeah, I could do that if you want, but they're not. It's not nearly the same. It's like This is why I use. 1 second here. It's why I kind of use. This is why I kind of use the MT4 platform, and I use another platform. I use the MT4 platform to find my trades, but I find that my trades just get stopped out too easily on that thing. But the charts with my futures broker are not nearly as nice to use. That's why I like to use the MT4 platform. Okay. So, anyways, I do trade a little bit with a forex broker, but I find that for my own personal trading, the futures markets are far better, far superior. There's a few disadvantages, but anyways, yeah. So getting back to this, going into the Japanese yen here, I had this chart as pink, and to be honest with you, looking at the Japanese yen on a weekly basis, there was a big fat liquidity area up here that we didn't get. We did hit this kind of lower area here, but when I looked at this trade on Monday, to be honest with you, on Sunday night, I saw this beautiful trade here, and I thought, oh, this gap close should be gorgeous, right? And I really thought about a short here on the Japanese yen, but I didn't take it. Okay. I just let this one pass. In hindsight, it was really beautiful. Later in the week, there was another trade on the yen. After we did this cascade down here, there was another trade on the yen. I forget where I saw it. Right here. There's another trade on the yen that got a nice 2-to-1 risk to return here. It was about 40 pips, and we went down to get this liquidity at 85 pips. It was a really beautiful trade. This one I wish I would have grabbed. Okay. And yeah, I didn't. I regretted it, right? But anyway, going on to the pound. Pound has been short on my short list on my swing trading for my swing trades all week long as well too. And there was a trade here on the pound that was really good. There was also another trade on the pound that I liked a lot. I think it was here. Now this one actually didn't work and broke even, but that was the pound. And looking at the euro, I was looking for shorts on the euro as well too, all week long. The euro, this run up here was absolutely gorgeous. We nailed this one for a nice swing trade. So the euro also had a couple other small trades. So those are my kind of my longer term things that I was looking at this week. And next week I'll have the exact same type of situation where I'll be looking for trades basically all during the week. Now going down to shorter time frame, which I'll just switch over to another thing here. I have another profile that I've created here. Each and every day I'll have a day trading bias, okay? And so, for example, on the Swiss franc going into today, I had actually, this should have actually been green, or white, short. I had actually a short bias, okay? Okay. I had actually a short bias. And so when the market, on a 5-minute basis, looking at the Swiss franc today, on a 5-minute basis coming into this market today, basically, this is what we were looking at this morning coming into the market. The market had been made a new low, and then, during the Asian session tried to rally, took out some liquidity down here, couldn't, I think it, did it get it all? Yeah, it looks like it got all the liquidity down here, ran all these levels down here, and then, look at it, put in this beautiful 5-minute candle and just rocketed straight up, but I can't short it, I can't buy it because I have a short bias on it going into today, and because I have a short bias going into it today, and overall my longer term view on it is for a weekly, my weekly bias on it, my longer term view on it is for longs. It kind of brings into a situation where you have a mixed situation. So whenever I have a mixed situation, because remember my weekly bias for it is for looking for longs on it, but my daily bias is looking for shorts, then you have to wait for super extremes. So even when the market rallied up here, and we found resistance up here, this wouldn't have been a trade that I would have taken today. Okay, I don't believe in stop hunts, Jano. But this little trade up here would have actually worked out really well if you would have grabbed that today. But I couldn't really justify that trade. Now, when the market rallies up here again, this would have been an area which I didn't trade today at all, by the way, guys. That's why you're hearing me sitting here chatting to you about hypothetical crap, because I had some personal things I'm going through this week. This area up here would have been far more attractive to me, and quite honestly, obviously I would have got stopped out on that one, and the market rallied up really, really high right now. I don't know what's going to happen with this, but what you see here, this big move right here, this is an actual interesting thing that I want to show you guys here, okay? Because you can learn a lot from this one. Remember Greg Mikulski webinar, a fear conqueror, but a greedy bastard too. That's okay, Chuck. Thank you, though. I want to look at the weekly chart. I want to look at a daily chart here of the Swiss franc. Actually, an hourly chart of the Swiss franc. This is an interesting lesson for you guys to learn. Okay, here's the hourly chart of the Swiss franc, okay? Now, let's just pretend like we don't see this, right? Okay? Pretend like we don't see this. Now, remember I told you in my first webinar, Money Makes Money, which, by the way, I want to thank you all for voting me Best Webinar of the Year on that, for those of you guys that voted for me. I appreciate it. And in my webinar, Money Makes Money, I told you that markets move from areas of low liquidity to high liquidity. And I want you to understand how that concept actually works in action, okay? because a lot of people talk about stop hunts and that kind of stuff, and I just don't believe that. Okay, I do believe brokers screw around with you. Individual brokers screw around with you. I don't. That's why I don't day trade with a forex broker. I don't day trade with one because to day trade with a forex broker, you have to time up. Anybody that tells me they day trade with a forex broker on 5-minute charts, I call them, excuse my language, but horse manure. I tried to day trade with a forex broker, and the way that I would have to normally day trade, which would be very aggressive, I found I couldn't do it. I actually blew an account, to be honest with you. I found that the way that to accommodate for the extra pips from a day trading perspective just was not possible, at least with my style. Who knows with somebody else's style, but the only way you can really day trade with a forex broker, in my opinion, is on a 15-minute chart, which you can do. And I think if you got to time up, Jano. You got to time up. Okay. There's no way if you don't have a minimum of in my opinion, a 15 pip stop. Then maybe Wiki. If you don't have a minimum 15 pip stop with a forex broker, I think that you're going to blow an account. I don't think it's possible. You have to have minimum 15 pip stops. That doesn't mean you can't day trade with forex brokers. I think you can, but you just have to time up. Okay? Because usually most day traders will trade off of 3 to 5 minute time frames, and I just don't think that's enough. Okay? I don't think that's you can overcome that. I don't think with the slippage and with the way that the spreads work and with stops being hit on bids and offers, not on markets trading through them, which is why I trade the spot market, or sorry, the futures markets, because I don't have the same issue. So if you are day trading with a forex broker, my advice to you is go to 15-minute charts. Okay, and trust me, you'll make more money. Right, or even better, if you can find a way, and I've never been able to find a way to do this with MT4. Maybe somebody knows how to do it, but if you can go to a 7-minute chart or an 8-minute chart, then I think you can day trade with some forex brokers, but you got to go to an 8-minute or 7-minute chart. Okay. But anyways, let's talk about something really here. What's I going to say? Liquidity. Okay. So looking at these levels here we have. One second. Here we have a market that I want to show you how liquidity works. Okay. Now, just for a little while, imagine that you are long from this move off the bottom. Okay, so you're long from this move off the bottom. You're a pretty happy camper, aren't you? Right? Let the market finds a top here. It comes down. It starts to go higher, but it can't go higher. And then selling pressure comes in. Buying pressure steps back in. Selling pressure steps back in. Okay. So at this point in time, at the end of this week, if you were long, or anybody that is long from this entire move here, okay, they're looking at protecting their profits, right? So they're seeing that a level like this level right here has developed, and this is an area where there is going to be a lot of order buildup, okay? Can I convert it into English? Wouldn't know how to do that. Wagar. Waquar. Anyways, I don't know how to do that, so I wouldn't be able to answer that question. So in any event, got a lot of orders here. Okay. So, but what's happened with this market here is this market hasn't been a straight ballistic move, right? It's been, oh my God, the CAD made a new move on the daily. Sorry, I wasn't even looking at the CAD today. Holy crap, holy. Sorry. I want to take a look here at the CAD. There might be a trade here on the CAD. Ah, beautiful. Look at that beautiful fade. Right to 30 again, eh? Wow. Wow. I got burnt on the CAD earlier this week, so I'm looking to get a little bit of revenge on it. Interesting. All right. Sorry, I got a little distracted there. So what's happened is the market has built up liquidity. Now just use a little bit of common sense. Okay, just looking at this chart and thinking about all of these trades that happened in here, where are the orders building up? Where are orders building up? I mean, doesn't take a 6-year-old could figure it out, right? If I stood back for chart, there's going to be a lot of orders built up here. There's going to be a lot of orders built up here. All right. So this is what I mean by markets move from areas of things. So the very first thing that happens is the market moves down and grabs that liquidity. Okay. Now this wasn't a stop run. This wasn't anything intentional per se. There are large institutions that can move the markets around, but there's a difference between a stop run and regular market behavior, and that's what I think a lot of people don't get. Okay, a lot of people don't understand. They're constantly looking for the conspiracy theory. Okay, looking for who's out to get me. Okay, and that's just not the case. There are times when what do you call it? There are people out to get you per se, but they're not out to get you. They're out to get your orders, right? And they're out to get the biggest amount of orders that they can. Okay. Yeah, you could say that, Boyke, but there's a difference. Okay, there's a difference between it. Jano, Steve, do you take 10 pip moves with 15 pip stop or even 15 pip moves? Jano, I'll be honest with you. I trade everything. I'm just a bit of a maniac. I'm a bit of a cowboy when it comes to trading. If I see money, I go and grab it, right? Yeah. If I see money, I'll go and grab it. But I have a lot of confidence in what I do, so I'm not too worried about it. But I wouldn't suggest that for 90% of people, right? Because so much of trading is confidence. And if you're not confident in what you're doing and how you're doing it, it doesn't matter what you do, you're going to fail at it, right? So you have to have something that you feel really, really, really confident in it, right? Okay. But no, Luca, it's a hero trade. It's a hero trade on me. Okay, I actually made a mistake. To be 100% completely honest with you, I don't know why. Like I said, I have a few personal things I'm going through this week, but I had made a mistake on my weekly CAD here. On my weekly CAD, my swing trading CAD should have been for longs, and I don't know why, but I had it pink. I was just clueless. I make mistakes, and I took this short here on the CAD. For some reason, I don't know why, weird thing that happened. I took a short here on the CAD, and I was looking for this little gap to close down here, and I thought, oh, this shouldn't be too hard to close here off of this area here. And I took this short, and then right after I got into the trade, like an idiot, I realized, oh, shoot, my CAD is, I shouldn't be looking for shorts on CAD, right? And I ended up sticking with it. I'm just being 100% honest with you. I stuck with the trade, and because it started to work, right? And I was like, ah, damn. And it started to work for me, and you know what, we might just do it. And then like a schmuck, uh-oh, somebody's got a mod. Take your microphone off. And then like a schmuck, I ended up holding on to it, and I got stopped out. So I was like looking at it and thinking, you know, this little gap down here still might close. And so when the CAD got up to 3100 here, it was another area where I liked it, but I wouldn't trade the CAD short right now. And looking at the weekly chart of it, I think the CAD can go higher. Now I'm thinking the CAD. Look at this chart. I mean, this is such a, you know, a lot of people don't get, you know, how important looking at charts is, right? But the CAD has this history of putting in white candle, white candle, white candle, black candle, white candle, black candle, white candle, black candle, white, black, white, black, black. There's no smooth moves in that, right? So it makes it a very volatile pair to trade, right? So if you want to specialize in it, you can make a lot of money if you know how to exploit it. You just have to understand its characteristics and its nature, okay? But this CAD can do anything. Right? I mean, it looks like now it's starting to get a little bit more fluid, and the moves seem to be having a lot of follow-through more. So it looks to me like there is a possibility that we could go up to get this liquidity up here on the CAD. Well, it depends. It depends on your time frame you're trading, right? Sometimes volatility is good, right? So I wouldn't touch a short on the CAD until I see it. Now, I do want to short the CAD soon. I just don't know where yet, but not just yet. Okay. So getting back to some lessons, right? So as you can see, the market goes down, gets us liquidity, and even drops lower and gets some liquidity. Now, the reason I'm sharing this chart with you is I want to share something with you. This entire week, all of this, there's a ton of orders up here that have been building up in this area. Tons and tons and tons and tons of orders from all these guys that got short at this level, 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 short at this level. There's a lot of guys up here that there's a lot of order build up here. Okay? Now, when you see this happen here, this is what's called a cascade. It's really a cool thing. And I'm going to show it to you in a second. When the market finally does break through this area, take a look at this big, huge wick here. Okay? This is a lot of stop orders that are getting triggered at this point in time. So you got a move here of 22 pips. Okay? 22 pips that got whacked at that point in time. So I was showing you this particular trade because I want you to understand that when you see these big wicks that happen, a lot of times this is what's called a cascade. All right? And a lot of people think of wicks, and they misunderstand what a wick is on a candle, right? They think that it's something that it isn't. Okay? A lot of times it's just orders getting whacked. Now remember, I had this as a long for this week. Okay. Oh, we got a harmonic guy in the room. Gregorgas Lazguski. This is a bearish crab. Crabs are delicious. Okay, so that's what that is. Okay. Oh, let's go something here. Now, getting back to some day trades, let me just look at some day trades. Let's go to the euro. Well, they are delicious, especially in sushi. All right, so going into the euro today, here we have, I actually have a long bias going into the euro today, but once again, this is kind of a similar situation. My longer term view is for a short bias on the euro, so we have a mixed situation on the euro. Okay? So, where can we get long on the euro, right? Yeah. Boyke, there's nothing that I haven't heard of, okay? If it's out there, I've studied it, right? There's nothing that I have not traded in one way, shape, or form. You know, and that's why I encourage everybody to try lots of things, right? You know, price action's great. Chart patterns are good. Candlestick analysis is fantastic. There's all kinds of stuff that you should study. It's really good that you study it because it's going to make you a better trader. But here's the best advice I can give all of you. Don't believe in anything. Yeah. Don't believe in anything. Okay? Believe that the goal of a trader is for you to exploit everything. Okay? Yeah. Right? Listen, I have a friend, I think I told you guys this. I have a friend that makes a fortune using 2 moving averages. He makes a lot of money just using 2 moving averages. People will go, oh my God, that's crazy, right? And he makes a lot of money using moving averages. Okay? And just 2 of them, that's all he uses. There's the secret question, the trick. Yes, I even study Ichimoku. And I actually traded off of what do you call it? Not Ichimoku, but the other one. Oh shoot, the other Japanese candlestick styling, which I really like. It's for some reason slipping my tongue, the tip of my tongue right now. Not Ichimoku. Hakanashi. Thank you, Fernando. Hakanashi. I love Hakanashi candles. They're fantastic. They were great. Okay, but I've studied it all, right? I've studied everything, and I've bought a bunch of courses. I've bought every book you could possibly imagine, and so it's all about. At the end of the day, I found that just looking at a simple chart could tell me everything that I needed to know. That everything else could help, but for some people. Putting indicators up. So, like for example, if I have a client that comes to me and they're not getting something that I'm trying to tell them, then I'll throw an indicator up, right? I have some students that have come to me and they, Steve, I don't see that trend. I don't see this, or I don't see the momentum behind things. I'll say, okay, fine. Well, you know what? Let's throw an indicator up. Okay? So they'll go, well, how can I do that? So I say, take a look here. Okay, if you can't see the momentum in this, like when I'm looking at this chart, here's what I see, okay? I'm looking at buying pressure, more selling pressure. Nothing. Buying pressure, stronger selling pressure. Buying pressure, strong selling pressure. Buy. Sell, 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 sell. Buy, 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 buy. Buy, 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 buy. Buy, 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 buy. Sell, 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 sell. Isn't that cool? Just do that in your head. Just do that. Just take a chart and do that. Okay? And it will tell you where the strength is. It will tell you where the momentum is. Right? So, but let's say somebody can't see that. Right? So say, okay, you know what? Let's throw up an indicator to do that. Right? Let's throw up an indicator. Where's indicator list? Insert indicator. Let's throw up an oscillator like the MACD. Okay. And let's just throw that on the chart here. Okay. Now, if you can't see that, if you can't see it, where if there's more selling pressure than buying pressure, then why not use a MACD? Okay? Okay? Because I can just look at this chart and I can say to a 6-year-old, okay, stand at the back of the room, okay, maybe not 6-year-old, go 12-year-old, stand at the back of the room and tell me, is there more lines below this level or more lines above this level? Okay? And a 12-year-old could say, well, there's more lines below, Steve. Okay. So, what should you be doing? Should you be looking to buy or should you be looking to short based upon the momentum and the strength of the price oscillations? Okay? So, do you guys get what I'm trying to say here? Right? But if that's what an indicator should be used for, it depends. You're looking at that indicator to find out whether or not you should be buying or selling, not where to buy or sell. Okay? That's all you're looking at that indicator for. It should be used for confirmation of doing that, right? I remember once I studied with a guy, a great trader, I love him to death, a guy by the name of Woody, and he used to have a room called Woody's CCI room. And I actually moderated that room for a little while, to be honest with you. And Woody wouldn't even look at price, okay? He would look at his CCI indicator, and he had these really cool things. Here, I'll put one up. It's really kind of cool. He had these really cool patterns that that you could follow the indicator. Let me just put a CCI up here. Insert indicators. Oscillator. Yeah, CCI. Here we go. Woody CCI is a great guy. I love Woody to death. Oh, what's that? Woody had a way of, he didn't even look at charts, okay? So just imagine this is all he ever had, right? Uh-oh. I can't make it higher. Anyway, all he would do is look at this CCI here, okay? And he would have these little patterns in the CCI, okay? So, they were called blips and different things, and as the CCI would move from one area to another, he wouldn't even look at price at all. He would just look at the CCI. And actually, I believe he was a very profitable trader. Okay, so my point that I'm trying to make to you guys is that Luke, I just watch my videos. I mean, watch my Money Makes Money video. That's my technique. Okay, my technique is to find strengths and find whether or not a market is strong and buy it. Find whether or not a market is weak and sell it. That's it. That's all I'm trying to do, okay? So that's why I have my charts colored, okay? So, for example, I had my short-term bias on the euro today was for, let me just get this off. My short-term bias on the euro today was for my day trading bias on the euro today was for longs, okay? But my swing trading bias is for shorts. All right, so let's just look at some candlestick patterns, and let's just see if we would have had just some regular candlestick patterns here. What would have happened with our longs and with our shorts? Okay, so for example, here we have a very typical candlestick pattern, right? See this candlestick pattern right here? Right. Some people would call this a doji. It's not really a doji. It's more like a hybrid doji. So, you know, the market moved down and buying pressure came in, and then the market rallied up from this level and got liquidity up here, and then moved 32 pips and then went short. So buying would have worked here, but what would have happened if you would have held on? Well, it wouldn't have worked very well. But I can tell you that if I were buying the euro today, I'm going to be in a make-it-take-it type of environment, because I know that my longer-term pressure is on the sell side, but the shorter-term pressure today might be on the buy side. Okay, so here's another candle right here on the euro that this is one of the reasons why, guys, I tell you that day trading off of forex charts is hard. Okay, so for example, here's a candle right here that you could have possibly got long on the euro on. Now, this is why this is the thing I'm going to warn you about. If you want to become day traders and you want to use a forex broker, you can. Okay, don't get me wrong, you can do it, and I'm all for it. I think you can do it, but you just have to adjust the way that you're going to do it. Okay? Because otherwise, you're going to get stopped out a little bit too much as a day trader. Okay? So here's an example of a long here that I may have looked at on the euro. Okay? Let me just fix it up here. And believe me, forex brokers don't want you to lose money. Okay? They're not the devil. They're not out to get you. Right? They want you to be long-term profitable so that they can have a long-term client. So I want you guys to be clear about what I'm saying here. I'm not knocking anything or anybody, because believe me, you know, they want you to be profitable. I'm just saying that the way that the market works is one that you have to adapt to everything. You know, they say that human beings, there's a saying, okay, and I'm going to hopefully listen to me carefully, please, because it's really important for traders to understand this. There's a saying that the strong survive. I'll get to that in a second. The strong survive. We've all heard that saying, right? Strong survive? It's a lie. Dinosaurs were damn well pretty strong, okay? The strong don't survive. The most adaptable survive. Okay? That's your job as a trader, is to become adaptable. Okay? The most adaptable survive. Cockroaches have been around forever, not because they're adaptable. You can spray them with Raid, and in 2 weeks they'll become immune to the crap and start eating it because they're adaptable. Right? So anyways, here's a typical day trade that I may have looked at the euro in the past. And, we have this little candle from buying strength here. And looking at this trade, I would have looked at this level and I would have said, okay, can I buy this? And I would have said, well, there's 9 pips here. Now, this is what I'm talking about, okay? There's 9 pips with a risk here. Now, this is where I'm saying to day trade the Forex market, you have to have a little bit more than 9 pips worth of stop, in my opinion. So you can't take this trade here, put your stop down here. You can't do that, okay? Because I think this is going to get hit too many times, okay? And once again, just because of not the Forex brokers out to get you, just because markets move from areas of liquidity to local liquidity. So this particular trade, in order for you to take this trade, you would have to adapt it, and I don't think there's enough, I don't think there's enough room here on this, right? Now, what happens if I go to a 15-minute chart right now? Becomes a little bit more manageable. Remember, I have a long bias on the euro here, and now I've got a bigger trade here with 12 pips of risk on it. I can now get long on the end of this candle here, and I'm now got about 12 or 14 pips of risk. Okay. Now that trade, you can see, ends up going up and working out pretty decently. Let's see how much it got here. It ended up getting 27 pips of risk. So in this particular trade, you could have risked 12 and got 27, no problem. Okay. So going to a bigger time frame will help you if you want to day trade the Forex markets. Okay. So don't get me wrong, just time up. Get away from your 5-minute charts if you want a day trade. Okay? Questions? Right now, what are your thoughts on the euro? Luca, my thoughts are that I think it's going to probably, it looks like we got a bunch of liquidity here, and the way it's been moving so far today is that it found a top here, rallied down, buying strength come in, cascaded down. So I think what probably most likely will happen is we'll probably grind around here and come up a little bit more, and then possibly, I don't really know exactly how it's going to happen, maybe cascade down again. But it's 1 o'clock right now, and pretty much everybody's finished trading for the day in the Forex market. But it looks to me like it wants to grind up a little bit more, and then we'll have to see where it kind of finishes. Okay. Any other questions? By the way, one of the things I'm thinking of doing, guys, I want to throw this out there, is that I get a lot of people that contact me from FX Street, and I get probably 200-300 of you guys add me on the Skype, and one of the things I'm thinking about doing is I'm thinking about I've been in discussions with some of the people at FX Street. Because I charge a lot of money for my coaching, it's not really affordable to a lot of people. And I feel bad about that because I like to help people, but also I have to value the fact that it's taken me many, many years to learn what I know. And, I can't just give it away without getting value for myself out of it as well too. But I feel bad because there's so many of you guys that really want to learn how to trade and you can't really afford it, so I'm adjusting a few things. But one of the things I'm thinking about doing, and if you're interested in it, you can email Maud at thing. I know there's only 40 people in the room right now, but you can email Maud. I'm thinking about doing a weekend webinar with FX Street, offering, because just a special deal only for the members of FX Street, that we can do something where I would do a weekend webinar and reduce the price dramatically so that more people could afford it. So if that's something that you're interested in, obviously you won't be able to learn everything that you need to know, because I think it takes about 3 to 6 months to be really proficient at trading. But sorry, Marge. Sorry. Apologize. I'm just suggesting that if anybody, I'm just suggesting if anybody is interested, they could give you a little. If there's any feedback, you can just contact Maud if you're interested in possibly doing a weekend webinar. I'm just trying to find a way to help more people because I do get a lot of questions from you guys. And I know even in this 1 hour of talking about live trades, it's really hard for me. It's really hard for me to answer all your questions and really give you a really good understanding of how to take it and use it in your work. So in any event, if there's no more questions, Questions? No trade for me today, guys. None at all. And let me just take a quick look around the universe. GBP. GBP. How would I trade the GBP this afternoon? Looks to me like the GBP, I would, looks to me like the GBP on a 5-minute chart here. It's pretty much a mess right now. So I would say wait for an extreme. If the GBP were to pop back up, I'd sell it. If it were to pop back down, I'd buy it. The euro or Swiss franc, basically, I would only buy it if the Swiss franc comes back down to another level in here. I'd be only buying that. The euro, I think the euro, probably you want to sell it if we get another leg up, like a nice leg up. You know, like see here, we buying, selling pressure, buy. Then strong selling pressure. So what we need here is probably another leg up, and there might be an opportunity to grab 10 or 15 pips on it. Up here, the CAD, obviously it's gone ballistic. You only want to be buying the CAD. Man, I almost took a longer term trade on the CAD. The one trade I took, I was going to turn it into like a really big swing trade. I'm really glad I didn't. The Aussie dollar, take a look at the Aussie dollar. You want to be selling the Aussie dollar. Now, Aussie dollar looks really nice. I think the Aussie dollar might give you a nice trade this afternoon. Watch the Aussie dollar for a pop-up to this level up here. Okay, the Aussie dollar can get back up to 55. This would be a really nice area up here. There's a bunch of orders that have built up here, orders built up here, orders built up here. The Aussie dollar just got a little bit of liquidity here, and this is a marginal trade right here. If you took a short right here on the Aussie dollar, this might work. I'd have to take a bit of a longer view here. Let me take a look here. Maybe. Yep, that could possibly work, right? There might be a short-term trade here on the Aussie dollar here, right at this level right here. So a short here with a tight stop of like 5, 6, 7, 8 pips and a possible target of 15. I would watch the Aussie dollar, or if the Aussie dollar were to get back up to this level, whack at it hard. The Japanese yen, if the Japanese yen were to get back up to this level, I'd consider a short. If the Japanese yen were to get back down to this level, I'd consider a long. Gold, nothing but shorts on gold. So you'd have to wait patiently. Okay. Any other questions? If not, I believe my time is up. Greg asks, Greg Zurich, if there is some up move going out from an uptrend, buying investors will speed up this momentum in the next days. Talk about 4-hour daily. Go. Okay. I don't understand that question, my friend, but you can always email me or Skype me that question if you want later on. Thank you all for attending. I will be back next week for my regular webinar. And once again, thanks everybody for the votes on Best Webinar of the Year. Bye for now.